actually go. I'm having like allergic reaction this morning. I'm itching to death. I don't know. Maybe spring is coming and winter's going to be
I
over.
know it's good. It's good news. It's good news. The groundhog is coming out early.
Yes.
Didn't the groundhog die?
Yeah, I was just gonna say.
No, Angela, don't say that. Like nobody needs to remember that.
I think he did.
What? That's horrible.
I think he did.
Like,
oh my God.
Bill or Pete or something? I don't know. Yeah, he passed away, so that means our weather's gonna be shit.
Yes, he did die. I think I'm pretty sure.
Yeah, they have to get a new one or something.
I'm sure it's probably like the goldfish. It's probably been like 700 groundhogs since they started doing that.
I imagine they've swapped a couple groundhogs every now and then.
Yeah, I think so. All right, guys, we are here. We are live. We are joined today by Adam Pollock, who is the founder and CEO of Accept Inc. And we are so honored and excited to have him here with us today in the craziest market that has ever existed in real estate history. We're hoping that Adam's going to teach us some things about how we can maybe overcome some of this madness a little bit. So, Adam, why don't you kick us off by telling us some background on yourself and why Accept Inc., why real estate?
That's great. Yeah, no, and I appreciate that. And Lindsay and Angela and everybody listening today, thank you so much for having me as well. It's an honor to be on here. I want to answer everybody's questions, both about Accept, but also just about the craziness. So super excited to be a resource where I can learn from you all as well. But just to kick things off, I guess, a little bit of info about me. Like Lindsay said, my name's Adam. I'm the CEO and co-founder of Accept Inc. But before that, I grew up in Long Island, New York. I came from a real estate family. My father is actually one of the leading mortgage closing attorneys for all of New York. So kind of through him, I got, I guess, experience in the space, if you will. Grew up around the industry. I like to think knew just enough about why the industry worked, but ultimately, hopefully, think intrepidly about how it could be better. Went to a public high school out in Long Island. One of the good classes they offered senior year in high school was a real estate licensing class. So I took that senior year in high school. Actually made my family two promises that year. The first was that I would never go into mortgages. And the second is that I'd never go into the real estate industry because I found them both to be incredibly boring. And then on top of that, I told them I would definitely finish college on time. Fast forward, I end up leaving school at the end of my sophomore year to go co-found Accept Inc. So Lindsay, Angela, at least you know that I'm consistent. But basically, the story of Accept Inc. really began when freshman year, I met one of my co-founders, and we asked ourselves, we decided to take the summer off, be productively unproductive, and ask ourselves, if we were going to build a company, we were going to start something new, what would we want to do? And kind of naturally, I ended up settling, being pulled towards mortgages and real estate because it was the only industry that I knew enough about where I thought, oh, I can really make a difference here. And this was back in like 2014, 2015. So real estate transactional innovation was pretty much not there. So this was like really early in the, I guess, evolution of the new innovation that we're seeing now. And the two questions that my co-founder and I asked ourselves that freshman summer was really, if we could do real estate all over again, how would it be done? Followed by what is the best, smoothest transaction in real estate? And how do you provide that experience to everybody? And honestly, it does not take Albert Einstein to figure out that a cash offer that can close in 3 days is a hell of a lot better than waiting a month and a half to know if a mortgage is going to go through for one of the biggest, most important transactions of our lives. So we left freshman summer with more questions than we did answers, but I like to think that we were actually asking the right questions. And the end of sophomore year, we realized, my co-founders and I specifically, that you can't start a company and be in college at the same time. Fortunately, in my case, school's been there for a couple hundred years. It will be there for a couple hundred more. So, let me take a kind of a leap here and go find Accept Inc., go co-found what would become Accept Inc. now because I'm young, I can take risks, I don't have a family, all that good stuff. And ended up leaving that year. That was 2016. To go answer those two questions we asked. How do we turn every offer into a cash offer? How do we turn every buyer into a cash buyer? For 2 years after that, we iterated on different models. Lindsay and Angela, that's just the venture capital approved way of saying that we failed miserably for about 2 years until we got to the model that we got today. which is Accept That Inc., which is a new type of mortgage company that turns any buyer into an all-cash buyer. The way that we do it is really simple. We use our cash to basically purchase homes on behalf of buyers that we've pre-approved or pre-underwritten for a mortgage. And then once that buyer's loan with us is ready to close, we sell the home to them at the exact same price that we bought it for. So the benefits of the service are that buyers get to be all cash buyers using our cash. Sellers get to close in as little as 72 hours. Actually, it's 7 days now, excuse me. And real estate agents get to help their clients win. And kind of as a side benefit, they also get a guaranteed commission check when they buy or sell a home with us because we guarantee every single one of our deals. We launched the company in 2019 after we raised some money from some great investors out in San Francisco. In 20, we grew. I think we did like 14 transactions that year, so very much the year of the proof of concept. 2020, we grew a whole lot. We over 10x, and in 2021 we grew even more. And this year has been off to a start for all the reasons that I'm sure everyone on this channel understands, is that it's been super competitive and all that. So I'll leave it on the last note, and then I'll get off my the pedestal, and invite any questions and all that. But the most important thing to remember, the reason why I started this company, yes, I'm professionally ambitious. I want to build a great company, but also the mission of Accept is to level the home buying playing field. I believe anyone who affords a mortgage should be able to live in the best home possible, and that whether or not you have a couple $100,000 in cash in your bank account or you need to borrow it shouldn't preclude you from the best school districts, from the best neighborhoods. So that's why I do what I do. That's why my team does what we do. It's what we're really excited to help bring into market. And I've got to meet some incredible people along the way. So on that note, I'll stop there. But that's the 4 or 5 minutes institutional history of Accept That Inc. to date.
It's incredible. So if you're a buyer's agent or a buyer out there right now and you're listening to this, you don't have to use Home Partners of America. That is right now, that's like our only choice, right? That we know about. Like if you want to compete in the cash market, you've got to be a tenant for a year or 2 years.
Yeah,
and that's not the best solution, right?
No, I think there's a reason why Home Partners of America exists. I think it probably does really good stuff to make sure people can get on that property owning ladder. So I think that's a great product for that subset of people. I don't know much more about it, but for us, what we're really saying is, buyer, agent, if you're going to buy a home, if you need a mortgage to buy a home, and you want to submit the strongest offer possible, would you rather be pre-approved for a mortgage or cash approved with Accept That Inc., all else being equal? And I think that is really the mass market opportunity. And I also think that is the one that's going to have a whole lot of amazing impact for buyers, sellers, and the agents that serve them.
Yeah, definitely. So what happens if they are not approved to buy the house right that second? Like, do you guys have a lease back to them for a few months? Do they pay you a lease or?
No. So in our case, we basically turn buyers who can afford a mortgage now into all cash buyers. We don't do any sale lease backs, anything like that. There are a couple other great products out there for people who are interested in like on the margin buyers, if you will. The reason why we don't do it is because I'd rather be great at one thing than do a whole bunch of other things. There are a couple other solutions out there for those who can't afford a mortgage, but generally, Accept That Inc. is I like to think at least, the best in the world at turning buyers who can afford a mortgage into cash buyers. It's the one thing I want to be better at as a company than anybody else. And it's the one thing where I think I can have the most, we as a team can have the most impact. So that's why we focus squarely on that. But there are a couple other solutions out there that might help the other buyers more, like the sale leaseback programs and all that.
Okay. So question, most of the community, most sellers are not going to be able to move in 7 days. Are you allowing them to have a lease back until close, until they can move their stuff out?
Or a longer closing or whatever.
7-day close, but then allow them to move out.
Yeah. I mean, honestly, guys, like the 7 day, we can close as soon as 7 days. We've even closed in I think 48 hours is our soonest, which was a fun one. That was nuts. But no, we don't require that you close in 7 days at all. We just do that kind of for bragging rights, just to show you that we can close in 7 days, but it's really up to the seller and the buyer when they want to close, generally speaking. So no, we don't mandate when you need to close, but what we do provide is certainty and the ability for that buyer to write that offer and that agent to write that offer in the most compelling way for the seller, whether that's 7 days, whether that's 14 days, or whether that's 30 days. It doesn't matter to us. We just make sure that the cash shows up and that the transaction is clear to close from the beginning.
How about inspection? Do you guys have oversight on inspection items, or do you let the buyer buy the house how they want to buy it?
It's a great question. I'll take a step back and then I'll answer that question directly. So the way that I view Accept Inc. in this transaction is essentially an extension of the buyer and the agent, but we let buyers be buyers. We let agents be agents. Accept Inc.'s job is just to make sure that the cash shows up. So we really want to stay out of negotiation. We want to stay out of inspections. We let the buyer handle their own inspections. Typically, we see an agent recommend the inspector to the buyer, but that buyer can use whoever the heck they want. So no, we stay out of the inspection stuff. And generally speaking, we don't even request the inspection report. We want to let the buyer and the agent negotiate as they would traditionally, based on whatever the results come back. There is one exception to that. And the one exception is when we deal with VA buyers. We do request the inspection report because, as I'm sure you all know, those type of appraisals come back with some condition requirements. So then we will want to see the condition of the property just to make sure that it's actually financeable. But generally speaking, on 85 to 90% of our deals, we don't even request the inspection.
How about title company? Do you guys use your own title company, or can they use any title company?
So we usually do buyer picks, buyer pays for the cash purchase. So generally that's Accept Inc. paying our own title company. And the reason why we do that is because we don't want the need to charge the buyer for 2 closing costs. So we use our own title company. We use a hold open. You got it. We cover the cost of the hold open, all of that. And that's how we're able to offer a truly no cost or no additional cost cash offer. It's because we do have that title on our basically internally. And that's also an amazing kind of experience enhancement because it kind of allows us to control the transaction from end to end. So generally speaking, we do have our own, we're obviously a lender, and we do have our own title company. The role of the title company is to make sure we don't have to charge the buyer 2 sets of closing costs.
Where is the title company? Is it something that people all over the country can use virtually and close wherever they want with notary, or do they have to go to your location in Colorado?
Yeah, so it's right now our title company is actually only in 2 states. So it's in Minneapolis and Colorado. Our title company though it's an actual title company. It's here actually in Cherry Creek, and they can close by notary though. When states right now I won't go into outlining the states just yet, but we are piloting deals in other areas and states as well. In those states, we'll generally use whatever title company though the seller already wants to use. Of course, eventually we will get licensed as a title company in those states in the future. But we've closed by notary. We've closed in person. In person is always fun. A little hard with COVID, but just something kind of momentous, I suppose, and tangible about having a buyer actually walk in and do all that good stuff. So we love when they do come in person, but they don't need to. We do notaries and all that.
Awesome. So this is like a major deal for buyers. Okay. Do you understand the power of this? Like, you're taking a buyer that has to finance a transaction and can't compete in a market where there's tons of cash coming in.
Yep.
Into a cash buyer, and all they have to do is qualify for the loan, and you guys will give them the money, and they can close probably. How long after you guys close on the house do you typically close the buyer?
On average, it's like 14 days after the cash purchase to the mortgage closing. What's going on is we're actually doing the appraisal, right? Because our cash offer have no contingencies, and all that, right? We're issuing the final disclosures. But yeah, on average, it's 14 days. Sometimes it's as soon as 7. We try to obviously move it up as much as possible. But no, it's Angela. I mean, it's been, I will say, one of the most, not to be soft, but in this case, it's soft and true. It's probably the most gratifying thing as an entrepreneur to actually go from, like, I still remember, and I even have the piece of paper where we scribbled, the original idea for what Accept Inc. would become. And it was like 3 years ago. Like, it wasn't even that long ago. And to see now us having done hundreds of millions of dollars worth of transactions, helped hundreds of agents, like, it is and buyers, like it's
you've helped hundreds of buyers get into homes that couldn't compete.
No, we've had buyers, we've had literally buyers, and I've seen it, and is like they'll come to us after they lose like 5 offers, and then they're like, all right, I'm gonna go use Accept because my agent just told me about them. They'll win on their first offer, and they'll just break down. We've had buyers just totally break down because it's like all of a sudden this thing that was so elusive and so far away and so meaningful to them, we just unlocked for them. And that's like, it's the coolest thing in the world. Like, and it's like, and that's something that's always been super important to me. It's like, I want to build a big company, but I want to leave the world off. I don't know. We as Accept want to leave the world off a little bit better, a little bit more thoughtful, a little bit more fair, right?
Yeah.
And our product, like in the most tangible way I could ever imagine and hope for, is really allowing, is really, I think, is making a small step towards that bigger, brighter future, and that's a future worth fighting for. It's a future worth winning, one where it doesn't matter how you pay for a house in cash or with a mortgage. Everyone should have an equal shot at owning their dream home, and nobody should be excluded from that. And I think right now it's all the more important with sure the dynamics you're seeing. You have the institutional investors, you have these cash buy companies, and all that stuff. Like, and then low inventory and low. I mean, it's everything that you all know it as well, if not better than me. That I think is really making solutions like Accept Inc. As or more important than ever.
I have some questions. This is incredible.
Yeah.
Okay. So first of all, like I want to back it up to how the process works, but I really want, because the audience is agents. So what I really want agents to hear is that this is agent friendly. This is not like an iBuyer, like a Zillow or an Open Door. This is a very friendly. Yeah. Jennifer has a question. I'm going to ask that next. Good question, Jennifer. So walk us through, like, okay, I'm an agent. I've been out there. We have made those 5 offers for my buyer. I'm getting my ass handed to me. Maybe next time I'm smarter and I just go to you guys first. But how does the process work? How does the agent stay involved? And then I think the biggest question I had listening to you talk was, do you do any financing type? Because if you do, and it's not just like conventional approved buyers, I don't see why every agent in the world doesn't do this for every FHA and every VA buyer that they have.
Yeah.
Sure.
You can't win.
No, I think those are some great questions. And I want to make sure I hit every single one of them because there are a couple different points related to it. But I think to the first one, the more meta strategic level, like, is this a pro agent innovation? Is this an innovation that is trying to cut out real estate agents, right? I will say that, decisively, like, I view the agents' best days are ahead of them with products like Accept Inc. We are decisively pro agent. I think, while I am pro innovation of all sorts, I think the recent Zillow news has only just shown the world that the way to touch buyers and sellers, the way to get mass market, the way to help buyers and sellers the most is by working with agents, not against them. So in terms of Accept Inc., like, our goal is to allow every agent ultimately to be able to turn their buyers into cash buyers and let them write the strongest offers. In that regard, we're kind of a tool to agents, I guess, is the way to understand us. And vis-a-vis the agents, their buyers and their sellers and whomever else. In terms of like our positioning in the market, again, it's like I think 90% of our business comes directly from agents, like through word of mouth. There are allies in this. I like to think we're in their corner. We're extensions of them. And that I think has been a big part of why we've been able to distinguish ourselves in the market. It's because we've taken this decisive pro-agent stance. And we also recommend that every buyer work with a real estate agent. In fact, so on the contrary, and we're not a real estate brokerage. We don't take any commission or anything like that. We're literally just a lender who's trying to invest in creating a truly differentiated product to give buyers and agents cash buying superpowers. So that's our positioning. It's distinct from most companies in the market, I would say. And I also think that it's one that is going to have and has had and will continue to have a huge impact and a really good one at that. So that's our strategic level positioning. If I had to put some more context to that, we've all heard of iBuyers. I'm sure on this show. Another way that sometimes agents think of us is we turn their buyers into iBuyers. But we're not an iBuyer ourselves. We're not looking to flip homes. We're not looking to all that good, all that stuff. We're literally just trying to turn Joe and Jane Main Street and give them the advantage of being able to shop like Open Door, or shop like BlackRock, or shop like Home Partners of America, right? Like all those guys. So that's our strategic level positioning. If that helps clarify kind of what's distinct about us and how we work with agencies.
And then will you take conventional FHA and VA buyers, or are you only conventional buyers?
So most of our business is conventional. We have done some jumbos as well. We are not the most competitive on jumbos though, because it's really hard to get those jumbos investors signed up. So full disclosure, we're working on that, whatever. We also do some VA as well. It's not a huge part of our business just yet, but I think it's one that's going to ultimately grow very fast given how much VA buyers, I think, need a product like this. I don't obviously need to.
It will now.
Hey,
now Colorado Springs knows about it.
There you go. 1,000-mile journey. First step.
There
right?
you go.
So thank you for that. But yeah, the only buyers I can't really help yet, and it's downright frustrating, is FHA buyers. And the reason why is because there's a 90-day flip rule.
Yes.
In FHA, where you can't buy a home and sell it to an FHA finance buyers within a 90-day window.
Yes.
And it's absolutely maddening because what an amazing demographic of buyer we would love to help. And there's this regulation, it's totally well-intended. I know where it comes from, that is totally stopping us in its tracks. I am, full disclosure, working on trying to not circumvent it, but navigate that. But that's the only demographic of buyer that we're really not helping right now. We do help conventional buyers. So just to give you an idea, we're helping buyers with 3% down and 5% down. So I'm not just saying 20% down, we'll turn you into a cash buyer. I'm saying first-time home buyer, just trying to get on the property ladder, or maybe you're just putting 10% down, 5% down. It doesn't matter. We're going to be able to turn you into a cash buyer. And those, and frankly, are the buyers that we built Accept.Inc. for. I'm not just looking to help the people that are already far along, have an edge. I want to take the people that perfectly qualify for that mortgage, even if it's, they're on the lower end of the down payment spectrum, and turn them into cash buyers. And those are some of the best buyers that I think you could ever help. They're also the most grateful and typically the most fun to work with. That's what I mean by conventional. It's not just a 20% down. We're talking 3% down. We're talking 5% down.
Amazing. Okay, so Jennifer wants to know, and I had this question too. How does it work when it comes to the appraisal of the property on the mortgage end on the other side? So I guess my first question was, what happens if even with a cash offer, these buyers have to go way over list price? Like, do you restrict them at all from being competitive with pricing? And then how do you secure on the back end when they're purchasing the home back from you with the mortgage, essentially? Like, what happens if you end up with a gap?
Yep, that is an amazing question, and I'm going to answer that in 1 minute. I'm just going to get my Mac charger. Oh, here it is. Thank you, Tara.
Video kills the computer.
I had like half the battery. Okay, Tara. Thank you.
This is so cool. I saw a meme actually on Facebook over the weekend that I saved in my phone that made me really sad, that said, it was like a younger guy just out of college, and he was like, I kind of thought that the whole point of the United States of America was the American dream, which is home ownership, but it seems like it's getting taken away from us like more and more by the day. And he's not wrong. It's true. Like, this is crazy for the average person. It's impossible right now.
Yeah.
No, it's really rough. And, it's sad. And like, I'm probably on the younger side in terms of my age, but I have a bunch of friends that are a little older than me, 5-6 years older than me. They, some of them are single, some of them are just got married or having their first kid. And it's hard. Like it's hard, and it's not, but what's nice about it too, on the flip side, is that it's definitely a problem that I can relate to, I guess, in that regard. This isn't a product that I built for, somehow, someday this might be a problem. It's one where I see my friends having this issue. Like the faces of the buyers that are getting locked out of these markets, like they're all my friends. And I know that sounds like tacky as all hell, but it's true. And I'm sure you all have, friends as well, and nieces or whatever. And it's such a shame. But also, I'm an eternal optimist. And also I do believe, again, best days are ahead. Products like Accept.Inc. I think are going to make a huge difference. And it's amazing when you get to work with agents like yourselves who ask these amazing questions, including this one about the appraisal. So basically, this is how, let's just actually start with the general process. And I think that will illustrate what we do about the appraisal gap, because it's an amazing question, one that we get asked a lot. So basically, the step to work with Accept Inc. is, you can think about it first as having like two back-to-back closings. There's a cash purchase when Accept Inc. buys the home all cash directly from the seller. And then there's a mortgage closing when the buyer closes on their loan, they move in, they get the keys, right? So the question is how do we, because if we are submitting this non-contingent cash offer with no financing or appraisal contingencies, how do we solve for those contingencies? So upfront, what we ask our agents to do is to tell their buyers to get cash approved with Accept Inc. Really what that means is we're going to ask for the buyer's documents up front. So those W-2s, the pay stubs, all the things that lenders will ask your buyer anyway for, we're going to bring that up to the front, and we're just not going to procrastinate. And the reason why, it's actually two important points about that, two important points. The first is we want to have a high degree of confidence as a business that this buyer will afford a mortgage, because we don't want to own a home. Like, we're looking to make sure the buyer can afford a home. And then the second is it allows us to basically have a high degree of accuracy and rate as far as what that buyer will actually receive. So by taking up that buyer's credit information up front, we're essentially making sure that that buyer can afford a mortgage, giving them a high degree of accuracy in terms of their rate and their buying power. And that's good for the buyer, and it's good for Accept Inc. just as a business. So you can think about it as a pre-approval plus. You can think about it as an underwriting upfront, or underwriting TBD, I think is the mortgage lingo that some people use. But that allows us to make sure that that buyer has a high degree of, it can afford a home with a high degree of accuracy. So once they're cash approved with Accept Inc., we hand them a really cool, nifty cash approval letter, which says, congratulations, you're able to offer a $500,000, you can afford up to $500,000 in home. Let us know when you and your agent find a home that you'd like to submit an offer on. So typically that happens on the weekends. 70% of our business actually happens on the weekends. So we are probably one of the few lenders that is open 7 days a week and actually does its most amount of business on the weekends, because we work when agents work, which is when you're submitting offers, which is Saturdays and Sundays, late on Friday nights and Monday mornings. So we know how that works. But let's say a agent with that buyer who's been approved for $500K with Accept Inc. They walk into an open house. The buyer falls in love with the house. They walk out, and then the agent actually contacts somebody on the Accept Inc. team called our cash team, who is their single point of contact for the entire transaction, tells the cash team member, hey, this is the property my buyer wants to submit a cash offer on. They'd like to submit a $500K cash offer on this house. We run an internal valuation of that house. So basically, we have fancy models and AVMs that we essentially use to determine what do we think that this home will appraise for. And if we think that that home will appraise for $500K, we'll say, hey, looks good. Your buyer's approved for $500K. We think this home will appraise for $500K. Let's write this cash offer. Let's make sure that you get this in. Typically, that entire process, by the way, takes less than 2 hours. We know that agents want to submit an offer 5 minutes ago. So we are very familiar with that process. So we try to make this really quick. And it's also why we always staff for the weekends, because that's obviously when everybody's submitting their offers. Now, the more interesting question, though, I think is, well, what happens if that same buyer wants to submit an offer for
$550.
$550.
Yeah.
Will we allow a buyer to essentially pay more for a house than what an appraisal deems that it's worth? Right? That's a question that we get a lot. And the answer is yes. And here's how we do it. Basically, what we'll say, we'll come back with that exact same scenario. And instead of saying, hey, agent, yes, this buyer can submit an offer for $500. If that agent wants to say, I want to submit an offer for $550, we'll say, yes, that buyer can submit an offer for $550, but they have to have the assets to cover that expected appraisal gap. But if they still want to submit an offer for $550, we will let them. And I think over 60% of our offers, just to put a number on it, are with buyers who are putting in offers above the expected appraised value. And by the way, in terms of our accuracy for our internal valuation, over 99% of our values end up reflecting the exact appraised value. So we're really, really good at this. And it also gives a lot of insight and upfront transparency for the buyer. You
That's like a better percentage rate than like the actual appraisers, by the way.
Yeah, no, we're really good at
why we need them, huh?
Yeah.
Maybe so, we don't.
No, that's so that's how we do it. You can think about that also as appraisal insurance as well, because let's run that tape again, right? Let's say that buyer is wants to submit a 500K offer and we approve it for 500K, and let's say it appraises for 490, we eat the difference. So
What?
yeah, so that's on us.
Holy
right?
shit. Whoa.
Yeah. And that's happened too, right? Like that's also happened. Where an appraisal comes in low, we basically, again, our valuation acts as an appraisal gap insurance is another way that agents kind of conceptually understand it for their buyers. So that buyer knows upfront, this is the maximum I will need to pay to actually win this house. And in the event that that appraisal comes in low, we will make up the difference. We view that as a core competency of Accept That Inc. And that also allows that buyer to submit that cash offer with complete confidence, knowing with complete information up front in terms of what I'll pay, in terms of the additional assets I might need to afford this home and to afford this, this house. So, yeah, so that's how evaluation process works. It's an amazing tool for agents. It gives buyers a ton of confidence, and we're literally guaranteeing the value of a home. It's also why we try to work with the best agents possible. Generally speaking, we work with, we work with a lot of new agents, but we also work with a lot of repeat agents. Most of our business comes from repeat agents because they're agents that we trust. They're agents that know our process. And they also treat us kind of like as one of their team members. So when we have a question about the value, sometimes we ask the agent, we're like, hey, what do you think about this home? Because it's this dome property in the middle of nowhere, Colorado. And we don't want a lot of comps, which has actually happened before. And then we have to work with that agent to determine, hey, what will this home actually appraise for? But generally speaking, that's how our evaluation works. It generally takes less than 2 hours, always the same day. We work weekends when you all work, because that's when you all work. And that's how we give confidence to the buyer and the agent to submit an offer at appraised value or higher.
All right. I have a question because I think that everybody else is going to have the same question. Where are you making your money? Because you're not a nonprofit, right? So is it in the interest rate? Are you charging, like, what is it?
Yeah, no, it's a great question. So we make our money just like any other mortgage lender, mortgage bank or bank does. We make money off of the mortgage, right? So I don't know if you use Wells Fargo or if you use what's it?
No one uses Wells Fargo, Adam. That's a spoiler.
Right. But yeah,
if you're listening to this and you use Wells Fargo, that's like step number 1 in real estate.
Don't use Wells Fargo. I thought that was Quicken Loans. I must be mistaken.
No Wells, no Chase, no Quickens, no massive.
Yeah. So whether you use, let's say, Cherry Creek Home Mortgage, right, which is a lender right down here, or Accept That Inc., we don't charge any points or fees, first of all, unless the buyer wants to pay points to lower their rate. I mean, then we'll let them do that, but we don't charge any points or fees. We make money off of the interest rate, just like any mortgage lender does. Generally speaking, we sell our loans to Fannie Mae and Freddie Mac. The reason why is because they have the most competitive rates, generally speaking, versus like keeping the loan on our books ourselves. Yeah. Exactly. So that's where we make our money. We also make a small margin on the title, but not very much. It's kind of actually neutral because we have to pay for the seller's insurance on the cash purchase, and then we have to obviously charge the buyer for their normal title policy. But generally, that's actually cost neutral. That's just what allows us to make sure that the buyer doesn't have to pay 2 sets of closing costs. So generally, we make money off of the mortgage. That's our primary business model, just like any traditional lender, any traditional mortgage bank. The next question that I get all the time is, well, aren't your rates going to be all jacked up then? Because like if you have all this cost and you have this risk, how are you basically compensating yourself for that? And how are you, if you're not charging the buyer and you're not charging the agent or the seller for this cash offer service? So what we've done is we actually employ all of our loan officers. And when I say employ, I mean they don't actually get any commissions from the loan. So instead of a traditional lender's business model, which is, hey, I'm going to pay a loan officer 1 to 2% of the loan amount to originate this loan and to, acquire this customer, right? We actually completely salary them, and we take that same 1% and we use that to offset the cost of supporting this cash offer. And that's how we're able to offer a cash offer at a rate that is, I think, the bottom quartile of the market. I do say to every listener that I won't promise we're the lowest rate. You might find somebody on LendingTree that can do it lower, or at least we'll say they can do it lower. But I have not positioned, and we have not positioned our product to be a premium product. And I always go back to like the fundamental question that I want agents and buyers to ask themselves, which is, I want you to be able to be cash approved with Accept That Inc. for the exact same cost as it takes to be pre-approved for a mortgage. And if I start upcharging on rates and doing all that stuff, that's completely orthogonally against why I started this company. And it's also not consistent with making the cash offer a mass market product. So that's how we're able to offer a cash offer that's competitive, but also one that is obviously hugely differentiated because there's no contingencies. This thing can close in 7 days, turns normal buyers, Joe and Jane, into cash buyers.
This is blowing my mind.
Yeah.
I'm so glad you came today. Okay, so a good real estate agent who's done it a while, probably even a new agent, we have like a internal scale for the qualifications of our buyers. And we usually have a pretty good idea. And we usually have like a couple lenders in our, whole with, where this one, John and Jane are easy peasy, and maybe John and Sally are really rough. And we're going to have to send them to like the lender that takes the shit that no one else will, right? So like on the scale.
Is that the technical term? Good. Yeah. I like that. That's the technical term. Great.
And we do say to our lenders, by the way, we're sorry about this one, but please help us with it anyway. Yep. So like, where does accepting kind of fall on the line for qualifications? Because like, obviously you're going to have, like I've got one guy that can do the most ridiculous ratios of all time. And then you've got these other lenders that are like, we're not going above 30%. Like, where do we kind of fall on a provability scale?
No, that's a great question.
Are you only cherry picking like the most premium 800 credit score people?
No, I mean, again, like I'm going back to like what's it called? The buyers that we've served. I mean, we've served borrowers with credit scores in the 600s. We've served borrowers with 3% down. I mean, like we get creative, and we want to help the buyers who are disadvantaged to be cash buyers, right? Like, so we're not cherry picking the Google engineer who's putting 20% down and all that. Not there's anything against those guys or gals either. It's just, that's not the only people we want to serve. Yes, those are slam dunk buyers. It makes our life easier, the agent's life easier, it makes the approval process faster. But generally speaking, we're not looking to cherry pick. And again, it goes back to our mission of leveling the home buying playing field for all. That's something that we measure ourselves by. So that being said, I wouldn't use Accept That Inc. for like the product, like the weird ratio products or the FHA demographic yet. And it's partially that's us, trying to stick to a couple core products that we're really, really good at, as opposed to being everything for everyone. Like, I think that's actually where some people make mistakes. They promise the world and then they don't deliver. So I would say that if you have a conventional buyer, even if it's a low down payment buyer, if they have above a 640 credit score, they're going to be eligible for our program, even if they have 3% down. And even if they got all that money from freaking grandma, it doesn't matter. Like, we will help that buyer. And we're looking to, I can't believe I'm about to say this. We're looking to say yes, said every lender ever. But we mean it at Accept That Inc. But at the same time, we're not going to probably be the best product or the best choice for the buyers who are in the FHA territory. They have like a 50-something% DTI, or they need this second loan or grants and stuff. Again, we can get everything we want, across time. But right now, it's not a product that we probably are the best at. I would recommend you use the traditional lender for that formatting. But if you've got a buyer who's, again, low down, mid 600 plus credit scores, like, that is a buyer from our perspective that we can help you with.
But the weird thing is, this is the market in which, for the first time in my 20 years, and Angela's 20 plus years in this business, where like it doesn't matter, right? So it always, on this show, we're going into our third year on this show, and we've always given out like what we use personally to kind of screen offers as they come in on listings. And it's a page-long document that the lenders answer with, where they get the money, how are they qualified, what is their job set. This market doesn't care. It's literally who has the highest price and who has the nuts to back it up. That's a poker term, not a gross term, by the way. And like, with who's got the cash to back it up, right? That's all that matters.
But I'll add to that. What I think is so freaking cool and I'm not trying to, what's it called? Like, I'm saying this like with my Accept That Inc. hat off. But what I love about products like Accept is that it doesn't, like, sellers don't need to give a shit with us.
Mm-mm.
They won't know that your buyer actually has 5% down. They won't ever need to know. They won't care, and they won't ask, because Accept That Inc. has X million dollars to buy this house, right? Like, and that's what I think is so cool. It's like, it should have never been the seller's business what they're putting down for this transaction.
But what the seller does care about is the fact that it's actually a buyer that's going to live there.
I was just going to say that. So I was going to say, I think that every agent needs to do two things. You need to put Accept Inc. in your rotation for your lenders, right? So like, you know, you screen your buyers mentally. Everyone should go to Accept Inc. unless you don't think that they'll qualify, or unless maybe they're FHA for right now. But the other thing is, I think you've got to go back to using last week our offer cover letter or something like it that still shows sellers, right, that this is an end user, that this is a real family and it's not an institutional investor, because that is a big deal. Like, you know, there was just this huge scandal thing this last week on national news about BlackRock, right? And so the American public is very concerned about not selling to institutional investors right now. So you got to make sure that listing agent doesn't see proof of funds from an institution and not realize
it's exactly realize that it's ultimately a conduit to get a regular buyer, a neighbor in that home, not an investor. And something that we've done, and we support agents on this all the time. And I would say the majority of our transaction always feature an agent cover letter or a buyer cover letter that's actually from Accept That Inc. saying, hey, look, we have the cash, like, we're buying this home, but just so you know, Chelsea is actually going to be the owner of this house, and they just so love this house that they want to put a cash offer on it. And that, that's, what's it called? I will say, one, that's great, because then the seller and the listing agent know that, again, this neighborhood is being bought by somebody who's going to live there. And also, selfishly, with the Accept That Inc. hat firmly on, it's great marketing, because that is what we do, right? That is what we get to do. And then when a listing, one of the best marketing of our service has been a listing agent receiving an Accept That Inc. offer saying, holy shit, this is pretty cool. Can my buyers use it?
Exactly.
Right? Yeah. And so it's like, so it helps the seller and the listing agent know that there's a real buyer at the end of this transaction. It helps Accept That Inc. like basically help get its word out there to say, hey, look, you don't have to struggle, right? There is an option. There is now an alternative. Try us out. And I think that is something that, again, has helped propel our success. I'll even add some stats to that. I did ask for these right before this call, because I have a board meeting also coming up next week, so I should know this shit. So this is great practice for me. But basically, just to give you all some stats that we just pulled, on average, we have a 58% win rate. Which is pretty extraordinary, as you all can imagine. Right now. So on average, that means our agents are submitting 1, max 2 offers to win their home. I'm sure everybody here has the contrary example of what it's like with a typical financed buyer. The other thing is, on average, we beat 7 offers right now, which is pretty cool. And on average, we're over 2% lower than the next highest financed offer, which I think is a really interesting stat. Because what's going on there, and would love your feedback on that, because this has been one of the most interesting things that I've learned, and I didn't necessarily expect going into launching Accept That Inc. Cash isn't just about winning the best home, but it's also winning it at the best price. And whether it's a non-competitive offer or it's a competitive offer, we are rarely, if ever, the highest offer on a house. And that I think is awesome. And by the way, those savings flow right back to the buyer. And the seller, from their perspective, I guess, gets what they want, which is it's the best price and terms. But I guess I'd actually ask you that, Lindsay and Angela, what is going on there? Because I want to understand
I know what's going on.
It gets used.
They're saying we want to close in the shortest amount of time possible so that we can go buy that next house. And with this is the best way for me to do that, the quickest, and I won't miss out on the home that I love. So
Interesting.
I think it's also it's shy listing agents, right? So like, I can tell you, I just was in this last weekend. My buyer was substantially higher than the next offer that was cash. My buyer was financed. My buyer had the appraisal gap. My buyer had all of the same terms as the cash offer, and they took the cash offer. I I don't know how I feel about that as a listing agent, but I totally get why they did it. It's because there's virtually nothing that can go wrong with
Right.
a offer, right?
Or
You know,
if it does, it's 7 days versus 30 days, right? The
I
risk
mean,
is
even if the buyer has an appraisal waiver, the lender could pull that. You know, even though the buyer wrote. So to answer your question, my opinion is it's the way that contracts in Colorado are written, and most of the country is written to be very, very pro buyer. And those are contract changes legally that came out of working through the recession, because the country is so concerned. RESPA, all of the governing entities, were so concerned about making sure that the buyer was always protected, that we now have these extremely loose pro buyer contracts, when really it kind of needs to flip to seller, but they won't do it.
It just needs to be balanced. I mean, that's what it is. It's like, look, you can be pro buyer and pro seller, but at the end of the day, it's like, this is something that where I think this is academic and dorky, but I'm dorky. So I've always, like, this is how I look at it. It's like, it's always the biggest shame to me that lenders look at their clients as just the buyer. Like when we put a cash offer on a house, like that seller is a user of our product at the end of the day. I don't care if I'm funding a mortgage or if I'm funding a cash offer. Like at the end of the day, the seller, the buyer, the listing agent, the buyer's agent, when you go under contract, you're all in this to make this work. Right? Like after that kind of like, the fighting, if you will, and stops, right? And it's just about what do we have to do to actually get this deal done? And I've always looked at accepting very much as like a product that is serving both sides of the marketplace. We're helping listing agents at least as much as we're helping buyers agents, and we're helping sellers at least as much as we're helping buyers, because they all benefit from having speed and certainty in the transaction.
Oh, it's the certainty for sure. I mean, we used to joke, well, we still say this, right? Like sometimes a pre-approval is not worth the paper that it's written on, but sometimes right now in this market, an offer is not worth the paper that it's written on, because while a buyer can throw everything on the line and go, I'm not, I'm doing a full appraisal gap, no inspection, blah, blah, blah. The contract is still such, when it's a financed buyer, that they can get out up to probably 2 to 3 days before closing for any reason. They'll claim that it's loan objection. They'll claim that something is wrong with their financing, but we know it's not because of their financing, right? So that's the one date in that contract that makes people want to choose cash, because there is no loan objection.
It's a parachute, right? Any one of those contingencies is a parachute. Like you could put in a cash offer and have an inspection contingency fundamentally, right? And as most cash offers do, but it's like that it's a shame. And I know why it's there. I get it. But there's got to be a better balance. I actually talked to some people at what's it called? The Denver MLS. I forgot about it. I'm forgetting it right now.
Like Colorado.
Yeah, RV Colorado about this, and they were commiserating about it too. But it's hard to change these documents. Like it's not like this like overnight thing. Like they have to get a bunch of stakeholders.
The lawyers and the governing boards, and it's a huge deal.
So I was like, and we were disappointed, but it totally, again, well intended, like the FHA, super well intended. Totally get why they don't want any home flipping and all that stuff with FHA buyers, but it also precludes. It also has these huge debt, huge impacts on the buyers and the sellers, because it makes their offers fundamentally weaker. I'd actually extend that one more, and I would say the fact that these FHA buyers and these VA buyers have these condition requirements on these appraisals, I mean, it's total crap. I mean, at the end of the day, because those buyers, they're not even last online. They just don't even get in it. Like that. I mean, that's what I'm seeing. We're seeing. I mean, you all probably.
It's political, and we've talked about this on the show before too, like not to insert my political beliefs, because we don't do that here, but this is political. Like when you heard the prior administration talking about repealing Dodd-Frank and all of these oversights and overlays, this is what they were talking about. Policy affects how we play in our business every day, for sure. It sucks.
It's look, it's I will say kind of it ends like it begins. I think real estate buyers and sellers, despite the pain right now, best days are ahead. I think there's a lot of amazing what's it called, innovation that's coming into the market right now. I think from an agent's perspective and from a consumer perspective, I have no idea how those things started being at odds with each other with some of these other innovative products. I think that was the stupidest thing ever. What's it called? A bunch of West Coast people figured out that, oh, agents shouldn't be there. I think that's wrong. And I think actually there's a lot of venture capital being poured into from some amazing investors being poured into companies that actually help support the agent. And help their buyers and sellers. Accept That Inc. is definitely, I think, a thought leader and in that kind of this new type of pro-agent, pro-consumer innovation. And I'm excited about where things go. I'm excited about where Accept That Inc. And the agents that we work with get to take this product. I know we have a bunch of amazing stories. And I will say, like, again, I want to go back and thank you guys for having somebody like me on this channel. Because I think you all asking me these questions, it keeps me close to the problem that I'm solving. Even personally, like sometimes as CEO, it's funny, it's personal, but 2 years ago, I was the loan officer. I was the one that was talking to agents much like this, right? And all that. Like we were the sales team. And it was awesome because, you got to really see the impact that you're having and answer the questions up front. And me doing things like this, it keeps me close to that fire. It makes me, understand more about how our products are being used and honestly, like the pain points that you all are seeing. So I got to tell you, just again, thank you for having me on this. It means the world. Are there any like last minute questions, opportunities, things you want to see in the market that aren't there? Because that's the other thing with my Accept That Inc. hat firmly on. Like we're always interested in solving problems for buyers and sellers with agents. Is there anything else that you'll be like, wow, if they had this product, they would just solve this other pain point that I might not know about yet?
So a question or a buyer that I see a lot that has some trouble getting under contract. I see agents posting about it all the time. Like, who does doctor loans? Like, no one will finance a doctor, even though they are making hundreds of $1,000s ahead of them, but they can't compete in the market because they don't have, 400 grand down because they just finished med school.
Mhm.
Yeah.
You guys help with that.
Doctor's loans. All right. We might have it. And if we don't, I will find some lender and I will get back to you today, Angela, on that.
I mean, I don't have the doctors, but I know people that do.
That are looking for it, yeah, frequently.
It's like a big topic of conversation in a lot of real estate forums is who's doing the stated income and the doctor loans.
Stated income and doctor's loans. So I have to say, let me punt on that question, not because I want to give you the right answer, not just the fast one. And I definitely don't want to say, oh, come to us because we definitely have it, because that would be probably complete BS. So let me go check, and then I'll share that information with you so you can share that with all your listeners, even if it's not Accept That Inc. So you guys can solve that, because obviously, like, spirit of paying it forward, I'd be happy to see if we can find somebody who has that out there. I'm sure somebody does, but let me see. I have a couple contacts that I can reach out to.
I bet your dad is so proud of you. Dad with the mortgage loan. Although I bet at first was he kind of like, Adam, this is crazy.
Yeah, it was a really cool moment I had with my father. So in the beginning, it was because I was going in school and I was off. I could have just kept going down that track and done all that. And I love school, so it was never a problem for me. I was just pulled by this opportunity. But one thing that was super touching for me was when I ended up leaving school. Like, I could tell my parents were a little, like, they were supportive, but it was lukewarm, right? They were like, all right, do it for a year and then come back, right? Make sure you can come back. And that was wise and smart, and they cared and all that stuff. And then, once we actually launched a company, we raised money, launched a company, started seeing some success stories. I think it was really nice. I got to sit down with my parents over, actually, it was last weekend, actually. So this was pretty recent. And they actually said, like uninitiated, how proud they were that I made this choice to go start this company and whatever. And that's like, as a son, not as an entrepreneur, just not as Accept That Inc. Screw that, right? Just as a son. I think there's very few moments that are more meaningful to me. And it was nice to see that go full circle. It took 5 years, but it's amazing. And that was one moment that I'll share, because it is nice. I know they are proud. And I know I try to share as many, I guess, success stories as possible with them, because I couldn't have done this without them. And they're a big part of every success that I have had and will have, God willing. So no, But it's thank you for adding that. But yes, they are proud, and they confirmed it last week. Not that it was ever doubted.
Your parents were fast. I'm 20 years in, and my mom is still always like, "You sure you just don't want to finish your MBA and just, get a stable job just in case the world explodes?"
No, I know. It's like, there's a quote that one entrepreneur once told me, and I always remember it. It was, I think people go down the path of, more standard work, and that includes like not being a real estate agent, because real estate agents, you all are entrepreneurs, right? Like you all have to build your own businesses, and you don't even have the help of fancy venture capitalists and all that, right? And I have had that. And when I say fancy, I don't say that in a bad way. Like they're amazing. They help support businesses like this and make the investors that you need, but you all don't even have that advantage. You have to go out there. You have to build your own book of business, build your own small, big business, right?
There's an 82% failure rate in the first 2 years because of it.
Yeah, and I think that's always something that where I've always gotten along with agents, is because we're cut from that same cloth. But what this entrepreneur told me when they were talking about why don't people take these jobs that have such execution risk, and he's like, the thing that he said is there's a difference between playing not to lose and playing to win, right? And I've always thought that was a really fascinating concept, because playing not to lose, it's safer to get your MBA. It's safer to finish college. It's safer to do all those things and get that steady job. But as you all have seen, and evidence of your personal success, and I'm sure a bunch of your community here, as well as this video, you also get the opportunity to go build something from scratch, and to do things that are several standard deviations from the norm. And again, it's another reason why I've so enjoyed this time together. And any way I could be a resource to you or your community here, again, accept that hat on and off. Happy to be. I will get back to you, Angela, on the stated income or the doctor's loan stuff. No,
thank you. Thank you on behalf of all of the buyers that can't get under contract, for finding a solution. Lindsay and I have been trying to find a solution to this for months, but we just can't figure out how to make it profitable enough so that we at least break even. You figured it out before us, which kind of pisses me off, but we're going to let it slide. I'm just very thankful that you figured it out, so that our buyers and buyers agents can find homes.
Yeah. Oh my God. And for everyone that's listening or watching, we'll go back on social and put accepting stuff everywhere for everyone to find. And yeah, I would just say dig into this stuff like this week. It's Tuesday. You can dig into this and get a hold of it before the weekend when you're taking your buyers out this weekend. So dig into it right now and get this stuff going, because you could win this weekend with this.
And I would also say, if you're a lender, I would be calling Adam and kissing his ass to see if he will hire you to come work for him.
I love that.
Because he's about to get real busy.
Much appreciated. That means the world, for one entrepreneur to another. Have a great rest of your day, guys.
Hey, can we keep you for 5 minutes after we end the live stream? Is that okay?
Yep. Yep.
Okay. All right. Thank you, guys. We'll see you next week.